There is a tax deduction that a significant number of Americans born before 1959 have never claimed, and the IRS is not going to call you and explain why it matters. It is completely free to claim. It takes about 15 minutes. And for the seniors who actually use it, it results in real money-back money that was always theirs. I have seen people save $247, $380, even $612 or more every single year just from this one change. Before we get into exactly how, subscribe right now and hit the bell. The tax code changes constantly. When it changes, the IRS does not send you a personal explanation. Subscribers find out in time. The ones who are not find out after the filing deadline, after the refund window closes, after the money is already gone. Stay with me until the end. The deduction is called the Enhanced Standard Deduction for Seniors, and starting in the 2025 tax year, the IRS significantly increased it for Americans who are 65 and older. It is free to claim. It lives right on your Form 1040, the standard federal tax return. And if you have never adjusted your filing status to reflect your age, it takes about 15 minutes to correct that, either on your own or with a free IRS-assisted program. Most people do not understand how this works. So I want to explain it clearly, because this is the part that actually determines how much money comes back to you. Here is how the Enhanced Standard Deduction works. Every American taxpayer gets a standard deduction, a flat amount the IRS lets you subtract from your taxable income before calculating what you owe. For 2025, the base standard deduction for a single filer is $15,000. For married couples filing jointly, it is $30,000. But here is what almost nobody talks about. If you are 65 or older, you automatically qualify for an additional deduction on top of that base amount. For 2025, that additional amount is $2,000 per qualifying person if you are single. If you are married and both spouses are 65 or older, that number doubles. You get an additional $4,000 stacked on top of the already elevated base deduction. And starting in the 2025 tax year, the IRS added a new bonus deduction of $6,000 specifically for taxpayers aged 65 and older. This is a separate, additional deduction, not a replacement of the age-based add-on you already receive. It is specifically designed for this age group, and it is the piece that most seniors filing on their own have never heard about. Here is what this looks like in real numbers. According to AIR's guidance, a senior in a 22% federal tax bracket who claims the full $6,000 enhanced deduction reduces their tax liability by approximately $1,320 in that year alone. That is $1,320 that stays in their account instead of going to Washington. Over a 10-year retirement, that is $13,200. Over a 20-year retirement, that is $26,400 from one box on one form that takes 15 minutes to check. And remember, that is just the new $6,000 deduction. Stack the age-based add-on from the standard deduction on top of that, and the total gap between what a senior pays and what they should pay is even wider. And here is the part that makes it worse for people who have been missing this. Because your Social Security income, your pension distributions, and your IRA withdrawals all feed into your adjusted gross income, a higher taxable income number puts more of your Social Security benefit at risk of being taxed. The SA taxes up to 85% of your Social Security benefits if your combined income crosses certain thresholds. By reducing your taxable income through this deduction, you may also be reducing how much of your Social Security benefit gets taxed in the first place. The loss does not stay the same when you miss this. It compounds across every income source simultaneously. The IRS does not find this for you. There is no automatic review, no alert, no letter that arrives in January saying, by the way, you qualify for an additional $6,000 deduction this year. The data goes in, the return gets calculated, and unless you specifically claim it, that deduction sits there unclaimed silently year after year. Tax software may not flag it either, depending on how your return is set up. The system is not designed to remind you. It is designed to process what you submit. Who is most likely to be affected by this? Retired seniors on fixed income. If your primary income comes from Social Security, a pension, or retirement account withdrawals, your taxable income picture looks very different from someone still working full-time. This group is most likely to be filing on their own without a professional accountant, which means the enhanced deduction often gets missed entirely. People who turn 65 between 2022 and 2025, the first year you qualify for the age-based enhanced deduction is often the year it gets skipped. Most people do not know their standard deduction amount changes the moment they cross that age threshold, and if nobody tells them, they simply file the way they always have. Widowed or recently divorced seniors, when a spouse passes away or a marriage ends, your filing status changes from married filing jointly to single, and so do your deduction thresholds. Many seniors in this situation continue filing based on old assumptions and leave a significant deduction unclaimed every single year. Workers from the 1980s and 1990s with gaps in formal employment, people who spent years in cash-based work, domestic labor, farming, or short-term contract work during those decades sometimes have irregular earnings records. This group often underclaims because they assume their benefits and deductions are minimal, when in reality, the enhanced deduction applies regardless of earnings history. Veterans and their spouses, veterans receiving disability compensation or pension income from the VA often have complex income pictures, and the interaction between VA benefits and taxable income is widely misunderstood. This group is specifically likely to benefit from a full deduction review. Seniors who filed with a paid preparer but never asked questions, a significant number of seniors hand their documents to a tax preparer, sign where they are told, and never review the return line by line. If your preparer did not specifically walk you through the age-based enhancements for 2025, this deduction may have been missed on your behalf with no fault to you, but with a real cost. Here is a real example of what this looks like. A woman who worked as a licensed practical nurse in a mid-sized hospital system throughout the 1980s and 1990s retired at 66. She had been filing her own taxes using the same online software for 11 years. Every year, she entered her Social Security income, her small pension, and submitted. The software calculated her refund, she accepted it, and moved on. When a volunteer at a local IRS tax aid site sat down with her in early 2025 and reviewed her prior return, they found she had not been claiming the full age-based enhanced deduction. After correcting her 2024 return and filing an amended return for the previous year, her federal tax liability dropped by $1,147. Her monthly effective savings going forward, accounting for quarterly estimated payments, came to $347 every single month for the rest of her life. She had been filing taxes for over 4 decades. She was not careless. She was not uninformed. She simply did not know this line existed, and the ears had never mentioned it. They had no idea that $147 a year was sitting there unclaimed until they sat down with someone who asked the right question. So, here is exactly what to do. Step 1. Go to irs.gov/freefile or irs.gov/vita. If your household income is under $67,000, you qualify for IRS Free File, a no-cost tax preparation program. If you prefer in-person help, the VITA and ARP tax aid programs offer free assistance specifically for seniors. Find a location at irs.gov/vita. Step 2. Pull your most recent filed return Form 1040. Look at line 12, which shows your standard deduction. Then, look at the checkbox section just below your name and address on page 1. There are 2 small boxes that ask whether you or your spouse are 65 or older and whether you are blind. If those boxes are not checked, your age-based enhanced deduction was never applied. Step 3. Verify your deduction amount matches your status. For 2025, a single filer aged 65 or older should see a standard deduction of at least $17,000 before the new $6,000 bonus deduction is applied. If your line 12 shows only $15,000, something was missed. Step 4. If something does not match, file Form 1040X. Form 1040X is the IRS amended return form. You can file it for up to 3 prior tax years. That means if you missed this deduction in 2022, 2023, or 2024, you can still recover that money. Download Form 1040X directly at irs.gov. Step 5. Submit electronically or by mail to your regional IRS processing center. As of 2024, the IRS accepts amended returns electronically for most filers, which speeds up processing significantly. If you file by mail, The address depends on your state. The IRS website lists the correct address for each state on the Form 1040X instruction page. Step 6. Track your amended return at IRS. Gov/Where's My Amended Return? The IRS provides a dedicated tracking tool for amended returns. Processing typically takes 8 to 12 weeks, but you will see status updates along the way. Insider tip, here is something most people do not know. The IRS can access your prior wage and income transcripts going back at least 10 years for free if your purpose is amending a return. So even if you do not have your old W-2s, 1099s, or income records, you can request a free transcript at irs.gov/transcript. That means missing paperwork is not a reason to skip this step. Most people spend more time comparing prices on a new appliance than they have ever spent reviewing the one document that determines how much of their own money they actually keep every single year. And every year that passes without checking, the gap does not close on its own, it stays exactly where it is, quietly costing you. The 2024 amendment window is still open. The 2023 window is still open. But those windows close on a fixed schedule, and once they close, that money does not come back. This is worth 15 minutes. Go to IRS. Gov, check line 12 on your most recent Form 1040, verify those age-related checkboxes are marked, and if something does not match, download Form 1040X and file it. That is the whole thing. No accountant required. No complicated process. Just 15 minutes and the right form. Subscribe, share this with someone you know who is on Social Security or approaching retirement. The 15 minutes you spend today could change every single tax bill for the rest of their life.